Back here with Business Lunch. It's status quo for the market, so let's speak to some interesting managements. The Edelweiss India conference is underway in Mumbai currently, and joining in now from the sidelines of the conference is Shantanu Khosla, the MD of Crompton Greaves Consumer Electricals. Hi, Mr. Khosla. Thanks very much for speaking with us, sir, and I hope you're having a good conference. You reported a very strong set of numbers just a short while back. But we were listening to some of the takeaways from the analyst con call that you had post your numbers. You said that definitely the impact of demonetization is not entirely behind us. By when do you expect, sir, for this impact to be over, for normalcy to return? And can this trajectory of earnings then continue?
Well, it's very difficult to predict exactly how long it will take to come completely back to normal. Because there is potentially some amount of inventory down the channel, plus longer-term uncertainties such as the impact on retail, on real estate, which impacts our business. I would, if I had to guess, I would say probably 3 to 6 months would be the time frame.
Sir, hi, this is Anisha joining in. Just wanted to understand, you mentioned that you're more exposed to the business segment. So can you please bifurcate what is your sales from business to retail and what part comes from business to business?
No, primarily our business is really B2C, business to consumer. It is only in lighting segment where about 40% of our business is B2B. What I had mentioned earlier was there's a correlation between our business and the real estate business. So if the real estate business takes some time to recover, that does have a correlation with consumer electricals, since a lot of our products are bought along with new property.
And sir, a word on the gross margin. This time around, the beat was 200 basis points higher than last year. Now, with the raw material prices going up, do you see that there might be some pressure going forward, or the price hike that you have taken in January, you intend to keep on taking the price hike so that you can manage the margins?
Well, obviously, we will work a couple of fronts given the commodity cost pressure. One is pricing. But beyond pricing, it is also critical for us to continue to work active, focused cost reduction projects. And the final thing is a strategic choice on driving more of the premium end of the market, which helps improve our mix. Pricing, we will obviously also have to ensure that we stay competitive.
And if I remember right, you did mention in your con call that in November and December you had scaled back some advertisement spend. Would we see that coming in Q4 and therefore the spike in the advertisement spend in Q4?
We are back in Q4 to advertising at normal levels.
Okay. And so coming to the cost reduction program that you have been having, and even the ESL impact as far as LED and fans is concerned, how do you see ESL impacting the fan segment as well as the LED business going forward?
Well, on LED, like I mentioned before, I think over the long term, ESL has a very positive impact because it has helped provide scale to all of us, which has enabled us to reduce costs, which we passed on to the consumer. I do believe, however, in some of the other segments, such as fans, pumps, the impact of the ESL program will be less than has been on lighting. And that's really because fans, pumps also involve an installation by a service provider, an electrician, a contractor, etc., which lighting doesn't.
So earlier, I think you were waiting for the December numbers to come by and to discuss the impact of demonetization. Now, if you would have a clear idea in terms of the market share, what the growth has been from the unorganized sector to the organized sector, and how has the market share been in the December quarter?
Our market shares in the quarter have grown across our core businesses, consumption market share, and we are gaining share from both organized and unorganized.
All right, Mr. Khosla, we'll leave it at that.